Hello everyone, welcome to Dikshant classes. Today I am going to discuss about the foreign exchange. Foreign exchange means foreign currencies and includes deposits, credits and balances payable in the any foreign currencies or drafts, traveler checks, letter of credit or bills of exchange expressed or drawn in Indian currencies but payable in any foreign currencies. Drafts, traveler checks, letter of credit or bill of exchange drawn by bank, institutions or person outside India but payable in Indian currency. It means that foreign currency which includes the deposit, credits and balances payable in any foreign currency. And it also includes drafts, traveler check, letter of credits, then which is expressed or drawn in Indian currency but payable in any foreign currency. And just like drafts, traveler checks, bills of exchange drawn by institutions, banks or person outside India but payable in Indian currency. Next is authorized person. Authorized person means the person who is authorized to issue currency and sell currency, buy currency, and which is approved by the Reserve Bank of India. No person shall be deal or transfer foreign exchange or foreign security to person not being authorized person. Reserve Bank has has been granted powers to issue directions to authorized person and carry out inspection of authorized person. Next is foreign exchange transaction under Fema. Fema puts the foreign exchange transactions into two categories. Foreign Exchange Management Act puts the foreign exchange transactions into two categories: capital account and current account. It consists of full current account convertibility and contain provisions for progressive liberation of capital account transaction. First is current account. It do not alter the assets or liabilities outside India are the current transaction. Persons are free to buy and sell foreign exchange and for any current account transaction except a restricted transaction. For example, payment in connection with the foreign trade, expenses in connection with the foreign travel, education, etc. Next is capital account. It alters the assets, liabilities outside India, a person resident in India, or the assets or liability in India, or person or resident outside India. The component of capital account include the foreign instrument, foreign investments and loans, the banking and other form of capital, as well as the monetary movements or the change in foreign exchange reserve. The capital account reflects factors such as commercial borrowings, banking, investment, loans and capital. For example, investment in foreign securities, acquisition of immovable property outside India. Next is difference between current account and capital account. An account which record exports and imports of merchandise and unilateral transfers done during the year by nations are known as current account, and an account which record the trading of foreign assets and liabilities during the year by a country known as capital account. And current account reflect the net income of the country, where the capital account reflects the net change in ownership in national assets. Current account deal with the receipts and disbursement of cash and non-capital item, and where capital account deal with source and capital application of capital. The components of current account trade in goods and services, investment income, unilateral transfer, where the capital account includes the foreign direct investment, portfolio investment, government loan, etc. Next is it. Current account transactions. Any person may sell or draw foreign exchange from an authorized person if such sale is or draw is current account transaction. Following the example of current account transactions: payment due in connection with the foreign trade, other business services, export and short-term banking and credit facility in the ordinary course of business, import payments, due as interest on loans and net income from investment. Remittances for living expenses of parents, spouse, and children residing abroad. Expenses in connection with the foreign trade and travel, education, and medical care of parents, spouse, and children. As per rules, certain current account transactions are prohibited and few need permissions if such transactions require RBI permission and if exceed certain ceiling. Next is capital account transaction. Reserve Bank main consultation with the government of India, which is central government, specify capital account transactions which are permissible and the limit up to which foreign exchange should be admissible of such transaction. Permissible capital account transaction by the persons residing in India. Foreign currency loans raised in India and abroad by person resident in India. Loans and overdrafted borrowing by person resident in India from person resident outside India. Maintenance of foreign currency accounts in India and outside by a person resident in India. A transfer of immovable property outside India by person resident in India. Then exports and imports of the holdings of the currency notes, investment by a person resident in India in foreign securities. Next is capital account transactions. Capital account transaction includes purchase of property, open a foreign currency account with a bank, acquire and holding the share or debt instrument, acquisition of employee stock option plan, investment in mutual funds units, unrated debt security, investment in the ventures capital fund, promissory notes, then setting up the wholly owned subsidiary, then joint venture, loan to the non-resident Indians who are relatives, and next is prohibited capital account transactions. The person resident outside India and prohibited from making investment in India in any form, in any company or partnership firm or proprietary concern or any engaged entity. And it includes in the business of the chit funds, as a nidhi company, in the agriculture or plantation activities, in the real estate or construction of a farmhouse, in trading of the transfer development rights. Next is an overview. Remittance for capital account prohibited unless specifically permitted. And then the approving authority, foreign investment promotion board. Il purchase of machinery or credited or the borrowing outside India. So such purchase. Next is current account transaction. Current account transactions are those transactions which are freely permitted and subject to the ceiling and freely permitted authorized dealers. Ceiling is central government. Purchase of machinery for cash and approval required where ceiling breaches. Thank you so much for listening carefully. If you have any doubt, any query, you can comment in a comment section. I will surely make videos. Thank you so much.